John, I want to start with you and go to that quote from Andrew Hollenhorst, the City, who says 200,000 on payrolls Friday, CPI June 13th, month-over-month core 0.4. We get those two things. He says hike is on June 14th. Do you agree?
Well, I'll just start by saying it's pretty remarkable that the last meeting was about engineering this pause that was widely expected. And I think we're seeing the playbook that we've seen in Canada and we've seen in Australia, which is like an attempt to pause, but quickly gets derailed with the need for further tightening that becomes obvious. So I don't have a strong view. I think the most important thing is that they're not cutting anytime soon. That was the biggest disconnect. That disconnect is disappearing now. Much more important than whether they hike. But I think the odds of hiking now are reasonable.
Jean, one key feature of your outlook for the whole of this year, you've pushed back against these cuts big time. And when it comes to the equity market and risk assets, you do not think the Fed's going to bail us out this time around. Is that, Jean, because you still believe that this inflation backdrop is going to be stickier for longer?
Yeah, I mean, I think we're going to end up eventually getting close to target on inflation. I don't have a strong view on when. I don't think it's going to be in 2023, and it won't probably be in 2024 either. But we're going to head towards that. But what is fundamentally different from what we've seen for the past 40 years, is that we're in a world where we're going to see ongoing inflation pressure underneath that will require essentially a tightening bias to be a structural tightening bias to be at play, which is the opposite of what we've been saying for the last 40 years, where there was like a structural easing bias. So I think that's the fundamental difference. And as a result, I think that the biggest part of the playbook, usual playbook that doesn't apply this time around, is that they won't come to the rescue easily if the economy tanks. The economy slowing, contracting is part of the recipe, and that's the part, we've been pushing pretty hard throughout the year. I think the market has moved now closer to what we think is in line with what's going to happen. But no rescue, I think, is the starting point.